Hi, everybody. Thank you so much for joining me. Today, I'm going to go over some of my favorite stocks to buy in the bear market right now. But before I do, please hit subscribe to my channel to keep up with all of my investing and personal finance content. And as always, be sure to check out the link on your screen right now for a message from our sponsor, The Motley Fool, where you can get the top 10 stocks to buy right now. So, leave any comments on or questions on any of the stocks I'm about to talk about. Do my absolute best to get to every comment individually. So let's get right into it. Um, there are a lot of great opportunities in the market. So, admittedly, it was kind of tough to narrow it down to just five. So, first off, my number five stock to buy this month is Digital Realty Trust, ticker symbol DLR. This is a data center company that is structured as a real estate investment trust or REIT. They're down almost 50% from the highs. And for a REIT, that's actually a pretty big move. One of the big reasons is digital realty has and data center REITs in general have been under attack by short sellers recently. Generally, the short selling thesis is that more tech companies are just going to kind of bring their data center needs internally, and I quite frankly just don't see that happening. Um, it's a big capital expense. These are very specialized facilities, and digital realty is really great at what it does. Demand for data centers will grow substantially in the years to come. The company is doing great work in expanding its geographical reach with big projects in India, Africa, and other parts of the globe. And in the meantime, it yields 5.2%, which is a really, really high dividend for this stock historically. So it's one that I've owned for a long time, and I'm very eager to add to it at these levels. Coming in at number four is Boston Omaha Corporation. I've done a big video on Boston Omaha recently. It's by far the smallest stock in the top five that I'm talking about right now, and one of the smallest stocks in my entire portfolio. Um, they're a big conglomerate. An up and coming conglomerate. You can watch the full video I did on them a few weeks ago for the whole description. Lots of long term potential. Their core businesses have fantastic economics. For example, they have a big broadband internet business that has gross margins over 80%, and their asset management division has the potential to multiply their revenues several times over all by itself. So, really big kind of long term potential and great risk reward dynamics because their businesses aren't very high risk, but the potential, if their business model works out, is huge. Number three is Bank of America, ticker symbol BAC. They're down almost 40% from the highs. I just did a video on Bank of America earlier this week. My favorite bank stock in the market. It's the best combination of high asset quality and great valuation. The stock trades for just over one times book value, which is historically very low for the bank. It trades for nine times forward earnings. The bad news is already generally priced into this stock, in my opinion. Yes, banks can get hit during recessions, loan demand will drop, defaults will tick up a little bit. But Bank of America is also a big beneficiary of rising interest rates. The average interest rate Bank of America pays on its consumer deposits, for example, is 0.02%. And meanwhile, consumer interest rates are rising rapidly, and Bank of America stands to make a lot more money from it. Number two is EPR Properties, ticker symbol EPR. And I can make the case that this is the biggest bargain in the entire stock market right now. It hasn't been the worst performer lately. It's down about 35% from its highs, with most of the decline coming very recently. It actually held up really well up until the past month or so. The big issue with EPR, which is a real estate investment trust that specializes in experiential properties, is that about 45% of its portfolio is movie theaters, and Regal is its number two tenant, and Regal's parent company is planning to file bankruptcy and is reportedly thinking of walking away from some of their leases. Well, the theaters EPR owns are the top quality theaters. If Regal walks away from a few, they will have little trouble releasing them. I don't think this is worthy of a 35% cut to the stock price. EPR pays a well covered dividend yield of 9% right now, 9% in monthly installments. It has more than $1 billion of liquidity for a stock with less than $3 billion of market cap. That's pretty huge. And there's a lot of opportunity to grow and diversify away from movie theaters, which is what they are planning to do long term. So again, big bargain right here. Uh, Number one, the stock that I'm most excited to add to, and this is probably the riskiest one on the list, to be honest, is Dreamfinders Homes, ticker symbol DFH. I'm a real estate guy at heart. I think home builders represent a huge opportunity going forward. Um, to be fair, the numbers in the third and fourth quarter could be ugly, plain and simple. More people are walking away from home purchase agreements right now than any time in the past few years. The real estate market's really tough right now. Mortgage rates are rising. Home prices are rising. You might see sales drop quite a bit in the near term. But Dreamfinder's land light business model, meaning that they don't own a lot of land in their portfolio, so they don't have to sell uh, to to stay alive, should really help them out through the tough times. This is a time tested business model. One of their another home builder that uses this is called NVR, and the only other major home builder to use this model. And they've been one of the best returning stocks in the market in history. And it's because they really are in a great position to remain profitable no matter what the housing market's doing. Dreamfinders has presence in some of the hottest Sunbelt markets, which are also some of the most affordable markets, which is a big edge in the current environment. The stock is down about 50% from the highs on general pessimism in the home building space and trades for about 5 times forward earnings right now. So, huge bargain. I see a lot of long term potential here, even though the short term could be kind of ugly. I think this has the potential to multiply in value several times over in the next few years and even more well beyond that. So, those are my top 5 stocks that I'm watching right now. This is not intended to be personal financial advice. You can't really decide what stocks to buy from a 7-minute video. So please do your own research before you buy any of these. And as always, again, leave some comments and subscribe to my channel to keep up with all of my latest investing and personal finance tips. I want to thank The Motley Fool for sponsoring this video. The Motley Fool is a company that provides investing insight and stock recommendations for investors of all skill sets and risk levels. You all know how much I love researching new stocks and trying to find the next best investment. So I'm proud to partner with The Motley Fool to bring you 10 stock picks from their popular product, Stock Advisor. Stock Advisor has beaten the market by more than 3 times. So go to fool.com/Frankel to get your 10 stock picks now. The Motley Fool Stock Advisor returns are 354% as of 9/12/2022 and are measured against the S&P 500 returns of 112% as of 9/21/2022.